All right. So a very warm welcome in our 20th session for the India Smart Protein Innovation Challenge. This is phase 3, the inspiration phase out of our 4 phases in this 5-month journey. We are almost 3 months into the journey now. 750 candidates started with us, and throughout the steps, we have remained with 150 candidates or participants who are students, engineers, startup founders, entrepreneurs, corporate professionals, people from backgrounds in food tech, agri-tech, biotech, but also allied fields. There are lawyers, there are chartered accountants, everybody who's interested in working in the alternative protein or the smart protein ecosystem in India. And today's session is on scaling, market sizing, segmenting, and distribution for smart protein startups. And we have 3 expert speakers, mentors with us today for our phase 3 webinar, who are Pooja, who's an associate at the DSD Consumer Partners Group, and they have been investing in FMCG companies and really building a category around that domain. And also recently, over the past couple of years, year and a half, they've been in touch with us. Previously, we've had speakers from DSD Consumer Partners on our webinar series, but today we'll hear from Pooja on their thesis and also aspects of marketing, etc., and go-to-market, etc., in our presentation. Then we have Sarthak, who's an investment associate at Huddle. Huddle, again, both DSD and Huddle are our smart protein ecosystem partners for the India Smart Protein Innovation Challenge 2021, and they are looking to support startups in the plant-based meat, eggs, and dairy domain, but also interested in speaking with startups in the fermentation and cultivated tracks, and further incorporating learnings from that in their thesis as they go on about building this category and investing in more startups as firms. We also have Sagar Mehta, who's the founder of VeganDukan.com. Some of you already might be shopping from his marketplace, but he's been working and been in touch with many plant-based meat, eggs, and dairy companies, listing their products on his platform, and also he's going to share his learnings and experiences having built such a company today with us. And in general, this is targeted towards ideas which need to be commercialized, who are going to market, early stage startups and mature stage startups. But I think even for researchers and students and other allied technology background candidates in our cohort who are working with startups or thinking of working in corporates on these products might find today's insights quite helpful and useful. As you know, I'm the host, Shardul, the innovation specialist at GFI India. And before we begin with the session, I'm going to let all 3 of them, by the way, introduce themselves a little bit and the work they do in their firm, so that we hear firsthand from their own mouths about the work they do and the ways in which they are able to help support startups and individuals in this space. Just a quick thank you to all our title sponsors, key sponsors, and organizing partners, Capri Global, NICE, Elchem Foundation, and CIECO, and our supporting partners from industry and academia. At the same time, all our smart protein ecosystem partners, like I said, DSD and Huddle, are also here with us today. And you've heard with speakers from others, and you will hear from speakers of other partners in the coming month or so in phase 4 as well. Having said that, a quick reminder for all of you to complete your entries for Smart Protein Solutions Wall. I've sent a mail about this earlier. So we have 53 teams who have qualified into phase 3, right, currently with us. And out of them, I've received almost 35 entries for now. All of you might have seen the 2020 Smart Protein Solution Wall, but you can also take a look at the entries this year. This is something we'll be sharing with all our mentors, all our partners, all the ecosystem partners, etc. you saw on my screen earlier, but outside of it, with a larger smart protein ecosystem, so that people can connect with each other, network better, people can hire, people can connect with investors, corporates looking for talent can connect with you. And, we hope that this really helps you get your ideas to the market soon. All right, great. So having said that, that's the end of my housekeeping items, and we'll go on to Pooja to start with the first part of presentation. So Pooja, why don't you share your screen, tell us a little bit about yourself, and then we'll go into your deck. After that, we'll hear from Sarthak, and the last one would be Sagar, and towards the end, we'll do a Q&A. But like I said, between submit them through the Q&A button or the chat function. And please keep yourselves on mute throughout the session. Thank you.
Shardul, you're going to have to repeat yourself for a while. I think we lost you there for like 5-10 seconds.
We'll take questions in the middle of sessions. So we'll start with Pooja's session first. Go on, Pooja. Yeah.
Sure. I'm just picking up from where you left off. Thank you so much for that, Shardul. That's a very warm introduction to DSG and to myself. Just to add a little bit of more color to what DSG does and who I am, DSG Consumer Partners was actually started in December 2012. So we're in our 10th year now and focused on consumer investing. When I say consumer is a bit of a catch-all for us. We look at tech-enabled consumer solutions, platforms, as well as consumer brands. A lot of the portfolio is concentrated on consumer packaged foods, beverages, and personal care. As you might have known, some of these brands, which are today household brands, 10 years ago were seed stage investments that we did out of Fund 1 and Fund 2, and we're currently deploying from Fund 3. This is a fund which is focused on India and Southeast Asia, very different markets, but also have very similar fundamentals. We have 2 offices. I am part of the India office and work closely on the consumption in CPG. Within CPG, plant-based is a very, very important vertical for us. When I say important, it's actually something that we've been focused on either through mainstream CPG products like Epigamia or raw pressery, which started off very different in the dairy or the juices category, but then launched plant-based specific products. And then there's also focus on tech-enabled plant-based products. This could be, in a way, tech for actually procurement, or there could be IP associated with the product formulation. So for example, we're invested in Float Foods in Singapore, also in Growthwell in Singapore. So very different kinds of investments, but very similar overarching theme. With that said, I'm just projecting my screen. If you could please confirm that you can see it.
Yeah, we can see it.
Super. Just to touch upon what Indian consumers eat, and this is a favorite topic at the fund, because I think we've always said that while the macro theme is focused on sustainable practices, also on being environmental friendly, and also at the same time eating healthy. So eating clean label as well as reading labels properly. India loves taste. So at the end of the day, if the taste is not matchable, that becomes an issue in itself. That statement aside, just highlighting what at least we started off thinking, we thought a major chunk of the Indian population was vegetarian, which was not the case, obviously. A lot of it is non-vegetarian, especially in markets which are not metro markets, if you will. And these markets consume meat along with vegetarian, which is to say the population being flexitarian has a very high component of grains in their diet. And that's also incidentally how I consume it. Over the years, I think what we've realized is the focus has been on white meat versus red meat in the country. And the meat of choice was chicken, very different from how the rest of the world had started consuming meat. The rest of the world is still very comfortable eating red meat and beef at that, which is obviously not the case in India. Having made that statement, we saw the Indian population was looking for something which was high protein. And when I talk about this population, this is more folks who are lacking in it because they figured out either through tests or through physical fitness tests while they were pursuing a sport or while they were working out. This is not something that came inherently to them. So this is actually a population which is kind of aware about what the problem statement is, but does not know what the solution to it is. So it's a vegetarian diet with supplements which are protein. Then there's folks who have a vegetarian diet who actually started consuming something like eggs because they realized they were deficient. And then there's also folks who are non-vegetarians through and through, but have not exactly been eating a reasonable quantity or have not exactly been eating the most nourishing kind of food. So this was the problem statement that we came across, where we said if a vegetarian diet already has protein in our pulses, in our dals, then where is the shortfall coming? And we just realized that rotis and rice and then quinoa and other grains are not going to obviously end up giving you that kind of protein content. What you need is something that you eat on a recurring basis, is affordable, and is also something that matches your taste palette. These three things put together, I think there was suddenly a white space in the country, just coming on to what it seems like versus the rest of the world. Now, like I said, the rest of the world is very comfortable with animal protein, and that switch, as we have seen it over the last decade, is now starting to be focused on plant protein for various reasons, which may or may not be similar to how India is consuming, but those numbers are still fairly high. So if we look at the per capita consumption in India, it is significantly lower than what it is for outside India in a country, let's say like the US, where the global average is about 68 grams of protein. We consume only 47. And our 47 is still very focused on non-animal protein. Now, having sort of come at the split of animal versus plant protein, there is reasonable consensus that our diet is not protein focused. So we do focus on fiber and grain, but we don't focus on protein very consciously. We've seen the rise of a few startups in FMCG. These cannot exactly be called startups with reasonable IP, but these are startups with very strong branding and are almost solely responsible for creating the plant protein category, if you will, in India. One of the very important examples that comes to mind is a brand called Oziva. If you have come across this, you've seen in their literature that they always talk about being plant-based. And there's a very strong reason to that, right? Because when they said they were plant-based, a lot of folks who would consume protein supplements could not digest them really well because it contains whey. There's a constant question about something like a pea protein, which is completely vegan. These are new products which are being formulated in India. I don't think the user base has always been very aware to what exists. So there's a lot of options. Those options have found their small limited niches, but the fact is those niches are growing at a very sort of fast rate. Having sort of emphasized that fast rate, that audience entirely today might be focused on consuming something that they think is only vegan. They think that is only plant protein focused. But what they're ultimately looking for is something that is work in progress. Why do I say that? Is because a lot of folks who are vegan may not find solutions for everything. They might have supplements even in addition to the vegan diet. There's a lot of folks who also consume a non-vegetarian diet but are still looking for protein supplements. So various audiences within a country like this, because we are diverse by nature, and this is something I think that is a very complex problem statement for a startup to solve. Because at the end of the day, you can't cater to everyone. You will cater to one niche or two niches, specialize in those niches, and then scale your platform. I think that has been one of the most important learnings for us over a period of time, that if you do end up focusing on a certain area, you have early adopters in that area who understand your problem statement. And those are the folks, because of word of mouth, that give you significant amount of visibility. Coming to just how the market is structured, we've all seen what kind of form factors exist. This is one of the most important pieces in a food brand from what we realize, because texture and taste go very hand in hand, and they are very hard to get right. And for those who are focused on making plant-based alternatives, all the more so. Because it also comes at a price. I think we cover the price point a little bit later, but when we talk about form factor, we've seen three overarching sort of form factors. One is supplements, like we spoke about. Now, this is not the most efficient way of doing things, but it is reality that the levels that we have in this country are alarming, and supplements are nowhere even close to satisfying them today. So the market potential for that category alone is significant. Other words that we've used, I guess, as investors for this category are nutraceuticals and even medication in certain cases, but a lot of this is over the counter. When we talk about meat, of course, there's a lot of startups which are now focusing on clean label meat, ethically sourced meat, various ways of doing this, because we have a lot of progress that needs to be made even in this segment from the existing supply chain. But the third and the most important that we're covering here today is the plant-based alternatives to all of those, which starts with, I guess, eggs and then chicken. And the meat and seafood verticals, I think we've seen less of in terms of how many folks have been able to start up, continue that journey, and be at it. Again, for reasons that these two are relatively way more complex compared to the egg and chicken form factor, which, like I said, is very palatable to the Indian consumer. Talking about just poultry in itself, I think the way eggs have been consumed, and I'm drawing parallels India versus Southeast Asia, because we have investments in the Southeast Asian geography on this one subject. Liquid egg has become a very important form factor in this one case. As you may have already seen, there's folks like Evo Foods who are doing it in India. There is an equivalent which is in Singapore called Float. The way these startups have approached the problem statement is very drastically different. Float has actually focused on R&D for the last 6 months, is focused on getting IP around the product. When they launch it, because Singapore eats boiled eggs and Singapore also eats sunny side up almost every day, the form of consumption is very similar to what people are already used to. Whereas in India, boiled eggs is not exactly staple. However, it is something that a lot of millennials especially are pushing themselves to consume because it's considered healthy, because their diet does not contain the nutritional value that it should be. And this is a breakfast item of popular choice now. However, liquid egg is not something that Indians are again very familiar with. So what I'm coming at is, again, the product exists, but the consumers are not aware about how to use this product. And there is this one startup which is continuously focused on what you can do with it. There's ways of tackling this problem on go-to-market strategy, which we'll come at in the later slides. Before which I just want to cover what plant-based chicken also looks like. I think for most of the plant-based patty as well as sausage startups that we've seen, the taste is very similar to something which is between chicken and red meat. It's not spot on for chicken or spot on for red meat, and I get that because it's focused on consumers who are probably consumers who would stand in a queue for a burger at a slider place. These are not consumers who would typically consume a McDonald's or a Burger King burger. So very different target audiences. But this is actually not something that has played out outside India. Outside India, the focus has always been on a beef patty versus in India where we're focused on something in the middle. I think folks are still figuring out what the taste profile should be for both of these. Also because this is not a form factor which is cooked on a daily basis. So a barbecue or outdoor cooking or even fire grills are not very common in India. These are products which you end up consuming largely when you go outside, and Indians dine out as well as deliver a lot. So because of that, we see a strong potential in the chicken as well as other meat, sort of patty, sausages, samosas, and various other form factors that people have come up with, which are more focused on exotic meals and not daily consumption. And then there's plant-based seafood, which is an interesting category because we see a lot of discussion around what can come up with shrimp. And in a big way, this has played out outside India, but within India, we haven't really seen a lot of folks who've launched it and have gone to market with it. So I think that's a space that needs to see some activity. But the first three have a significantly larger market size than the fourth, mainly because of these reasons. And also seafood is very easily available in a lot of places in India, which are coastlines, right? So staple food over there is very different from staple food for the rest of the country. And we'll come to purchasing power of consumers and how they sort of view these three brackets in itself. Just coming to who is the ideal consumer. I think this we've debated multiple times because there's two completely different profiles. There's people who want higher protein content, and these might just be vegetarians who want higher protein content, non-vegetarians who have a lack of protein in their diet for various reasons. could even be vegan consumers who realized they were low on protein. So it's all of these folks, and on the other side is folks who have a very strong view on animal cruelty, on how the environment will not be able to take the burden of meat, and ethical reasons for which they want to choose a plant-based approach. It is debatable whether or not all of these folks would be vegan. Some of them see their change in practice in FMCG consumption. So you'll see folks moving towards products which are certified, products which are ethically sourced, which you can trace. They're more focused on what is going in my body versus what is happening to the environment. And there's also another audience which is more focused on what's happening outside me, and might be vegan. And that is another niche which is very strongly growing, a niche which also needs products. And if any of you have tried going vegan, I think the two pain points that there could be with this diet is one, for caffeine consumption. Plant-based dairy still needs to sort of come up to speed with what the taste profile of something like a chai or something like a filter coffee is. Very different from what the West consumes. And then also focused on daily consumption of meat alternatives. So folks who actually love meat and have the taste buds for it, but don't find anything which suits that taste profile, and have to compromise, for the lack of a better word, end up having cheat days. And those are the days when you end up going back to meat. While it's a lifestyle that a lot of people have chosen, for ethical reasons, consumption of meat has not completely played out in this country. So we see people who buy on and off. We don't see people who have stuck to it continuously. Just speaking about dietary preferences, there is a very interesting population which is vegetarian and consumes eggs. And this is also a population which does not necessarily have deficiencies, but wants to shift completely to vegetarianism. So that's also a very interesting white space that we've seen, where a form factor like a liquid egg, or a form factor which a plant-based egg served at a restaurant, for example, in a dish would kind of be more relatable to this vegetarian audience. I think that's where we've seen dietary preferences play a very important role in how a brand positions themselves. So are you a brand that's positioned for the non-vegetarian audience, or are you a brand positioned for the vegetarian audience? And why would somebody come to your brand to make that purchase? I think the problem statement lies there. Once the brand has recognized that problem statement and can empathize with this audience, these are folks who will also tend to, because these are at the end of the day FMCG products, buy once in 3, 4, 5 weeks. And the minute you've made your second purchase with a brand, it's very likely that you've trusted the brand enough to come back for a third. So when that third purchase is a question mark even today. But we've seen a lot of brands, and I can, off the top of my head, name at least 2 or 3. There's Blue Tribe, there's Shakahari, who are focused on form factors which people understand, but may not be daily consumption items. So nobody is doing alternatives for rice and for dal, and very understandably so, because these are already vegetarian plant-based options. What they're trying to solve for is the trigger of when you consume non-veg or when you consume meat, more realistically. And they're trying to solve for your 6 p.m., 7 p.m. snack. They're trying to solve for one item which can go really well, even as a dinner in itself, like a burger patty. They're also trying to solve for maybe your dairy consumption, but what they're not taking away is your main diet. So what you have to remember is somebody who's shifting to a plant-based diet is still sticking to about 60-70% of their existing diet in itself. And a very good example of something that is still very niche today, but is a very interesting addition to the Indian palate, is soy chunks, because they have stayed in the market for a very long time. And we've seen these soy chunks actually have a very strong pro and strong con. So there's a very large audience which has never consumed them because they said the taste profile of meat versus soy chunks is very different, and we just don't want it. And the vegetarian audience not necessarily always liked the taste of soy chunks, so that still remained as a niche in itself. Whereas there's another audience which will just say, I will do whatever it takes for my protein content and I would consume whatever is available. So the low hanging fruit is something that as far as an incumbent brand is concerned, Nutrella tried to solve for. But now we see a lot of folks who are moving also away from soy as an ingredient and focused more on what users are used to already trying and buying, which is more moong and more dal oriented. So this is a very interesting addition to the palette. Coming to who is consuming exactly, right? If you had to go back and say what is the customer profile of a person who buys from you as a brand, what we've seen is almost all of these folks are health conscious. They may not be people who go to the gym every day. They may not be gym rats. They may not be people who practice some kind of workout every day. It might be a little light. It might be people who are focused on their calorific intake, but they're not focused on, in general, being somebody who wants six-pack abs, right? Which is a very different audience. So this is an interesting audience because at the same time of making the commitment to a plant-based product, they're also in a way comfortable with the preservatives or with the add-on, I don't want to call them preservatives and additives, but for the lack of a better word, that's the product composition that we're hinting at, which says that plant-based need not be the most clean in that sense. Being clean label and being plant-based are two separate things. So this is a population which is focused more on the plant-based piece and not the clean label piece. There's a second sort of vertical that you have to remember, that these people are also looking at ethical sourcing, if not looking at pro-environment. So which we spoke about, which sort of hints at traceability. And the third is, I think, the flavor of investing right now is the focus on the next generation, which is millennial and Gen Z population, because these are folks who are reading about the trends. They're watching as it plays out outside India. They are inspired by that trend there, or have consumed it outside India, have gotten comfortable with the fact, and are ready to make that purchase here today. Just by virtue of price points, what we've seen is people who are based in India also look at value for money in a big way across the board. Whether they're buying FMCG, they're investing in an asset, they're buying for their household, the focus will be on price. I don't want to say it's a price war, because it's not. It's a new category and people are very comfortable paying a premium to what they're consuming today. But we also have to be mindful about the fact that a lot of alternatives that are available today are almost double the price of what is being consumed today. And whether Indians are directly able to fill that gap today might be a question mark. Will they be able to bring down the price points as brands? For sure, because economies of scale have to kick in. And as the startup matures, the price point will fall down. A very interesting example of something like this is a brand called Good Milk, which is focused on plant milk, and again, very largely focused on the urban population and the upper middle class at that today. That does not mean that the brand is focused only on this segment for the rest of its life. It means that it will trickle down to other income streams, other sets of the audience over a period of time. But to begin with, I think the three important cities that somebody caters to is Bombay, Bangalore, and Delhi. Again, very different taste profiles, but a lot binds the three geographies together. So those two go hand in hand. And this is obviously an audience which walks into a modern trade store like a Nature's Basket or a Food Hall or an A+ GT store, and is very comfortable with experimenting. So if they are on a particular diet, whether it's the keto or whether it's a Whole30 or whether it's a vegan diet, they're very comfortable picking up something from the shelf and say, let's give this a shot. Whether they will come back or not is debatable, but this is at least triggering the first purchase. This audience is also very well read. That does not necessarily mean that they know exactly what you're solving for, but somewhere on a fundamental level, they understand the concept. When I talk about that, someone even like myself a couple of years ago would not have known the difference between what is plant-based, what is a clean label, what is focused on, I mean, what kind of plant-based products would actually have IP attached to it. Why should I consume a plant-based diet versus having meat in my diet? These are very fundamental questions which come up for various reasons. Now they come up in discussions as you have networking meetings, as you sort of meet with friends in colleges, and it's interesting to see that become a topic of conversation. In a big way, what we saw help was obviously the listing of Beyond Meat in 2019, which is when people, I think, for the first time started seriously talking about plant-based, because there was scale and there were numbers attached to the concept. So the audience today is very well read in that sense and might have consumed also some of these products. This audience is very comfortable also with online shopping, and like Shardul was mentioning earlier, has also maybe transacted on marketplaces which are more curated, which is where you would likely be if you're grocery shopping, if you're on a particular diet. And Vegano, VeganDukan, these are actually platforms which have really helped because they give straight visibility to a lot of brands like these. On something like an Amazon, for example, which is a behemoth, it's not exactly easy for brands to find a spot where people know that they exist. There is a certain spend that comes with it. There is a certain push with the power of search that comes with it, and it takes its own time. The other piece to it is this audience is very comfortable ordering in on Swiggy, on Zomato, even now on quick commerce. And this audience is likely to dine out as well. COVID aside, what we've seen is even when people go out, they are very comfortable experimenting, coming back to being experimental with food options. And a very interesting example of something like this is even an investment of ours, which is called Salad Stop in Southeast Asia. Salad Stop actually has a plant protein line, and they work with the likes of Beyond and Impossible. In India, we have Suzette and Kitchen Garden, which are focused on a healthy diet, which is generally salad bowls, sandwiches, and such. They also now came out with a vegan burger. So what we've seen is plant-based burgers are now becoming a very interesting addition to a lot of burger slider kind of joints as menus. And Social, interestingly, is also looking to do something similar. So is Smokehouse Deli. These are very important names in the urban millennial upper middle class sort of audience, and becomes a very important piece where people can discover a particular product. So if you walk into a restaurant, see something like this, taste it, then you have reasonable faith in a brand to maybe go online to their website and then purchase from them over and over again. So what we've seen has worked very well for CPG startups in general is that CPG needs to be tasted. People are not very comfortable just consuming anything. It's very difficult to trigger a purchase unless you've sampled the product. Now, whether you sampled it at a friend's house or at a store or at a pop-up is a separate question, and various things work for various brands. But how do you solve for it in a category like this where consumers may not exactly know how to use something like a liquid egg? And here is where a lot of video content, a lot of pop-ups where you actually have prepared dishes for consumers, because you control the experience in that situation. For the population that orders in and dines out, this is a very significant development. And an example of this is again someone like Evo Foods, because the founder comes from a restaurant background. And she had the platform where she actually had a tasting session, had prepared a lot of stuff, and people could try and then potentially buy the product. Very interesting additions to how we're seeing go-to-market happen. And coming back to square one, I guess, is when we say we rank taste above all. So no matter what the label reads and no matter how inexpensive the product might be, Indians are not very forgiving when it comes to taste. So this is actually an area that a lot of startups are focused on, and kudos to the founders who are at it, because developing a product takes time. And this is something that VCs are also cognizant of, is if it takes, let's say, 8 to 10 months to do consumer surveys, procure your raw materials or ingredients, have a basic manufacturing facility either at your end or captive, and then get IP around the product to ultimately end up launching it. We've seen a lot of brands who've taken 8, 10, 12 months to actually go to market with a product. And then comes the communication strategy, and then the marketing strategy, identification of who the consumer is. Overall, the go-to-market timeline is significant, and it is significantly longer than what we've seen in CPG or in QSRs, right? Which is form factors that people are already conversant with. So here is an audience which is not going to come back and buy the same thing over and over again. They will also want variety, which means if I come to a particular brand for a burger patty, what else can I buy from that brand is a very critical question to ask from a consumer point of view, as well as from an investor point of view. From a consumer point of view, for obvious reasons, because you're not going to be eating the same thing over and over. You want a different thing in your plate, which is essentially choice. From an investor point of view, it's a very interesting thing, because for folks who especially transact online, the concept of how much does it cost for you to acquire a new user online versus what is that user's basket size, which essentially translates into, are you making a profit on each purchase or are you losing money on each purchase, becomes a very critical question. Because here is a category where we don't know if we're going to get repeat users. We of course want the repeat to happen, but this is the first time that somebody is buying from us, and the cost of acquisition is bound to be high. So what that essentially means is each product needs to be priced moderately, but there need to be 5 or 6 products which somebody can buy in one shot, maybe once a month. And the cost of acquisition, which usually ranges from 300 to 700, depending on what price point you're playing at. And the higher your price point, generally the higher your cost of acquisition. That's the thumb rule that we use. That's a very interesting pain point essentially for a startup, because if you have to go to market with your second product, how long are you going to take to get to that? One product will take you only thus far. Unless you're an ingredient-led business, which is a very interesting proposition, because we've seen the likes of even egg, for example, something as basic as a spirulina, for example, which are very strong ingredients, which people are already conversant with, but they would not obviously know how to shop. So you are an ingredient which caters to somebody else's product, and you're betting on that person's success in this case. Also, the ingredient market is very, very friendly for exports, because there's a lot of folks outside India which are a lot more developed, which can still buy from you. Whereas the Indian market is still finding its feet, right? A lot of Indian startups are focused on building this out. If you're in India, you are creating the category here. If you're outside, you're more disrupting it there, which is easier. And there's no reason for somebody to only focus on one geography. You could potentially be a global brand, which is what essentially Beyond Meat is doing. Focused on the US for so long, and now has done a partnership with Urban Platter, and essentially is selling through them in the country. A lot of awareness comes on the back of people that you partnered with in other countries also. So it's a very interesting proposition there. And what we've seen, at least, is outside India, because people are more aware, that literature translates into visibility in India also. So we do expect some of the Southeast Asian startups to also start catering to India in a way, because there is a strong TG which is more cosmopolitan in Southeast Asia, which can also trace back to Indian roots. So that's one piece. And the last one, which is something that we've spent a lot of time on actually is plant-based dairy, because we talked about plant-based alternatives mainly for meat and protein, but there's also a segment which is focused on what do I do instead of consuming milk or milk products. And we've seen both mainstream players. So somebody like an Epigamia, which is now more mainstream, has grown to a certain scale without being plant-based and then introduced plant-based products. And then very singularly focused plant-based dairy startups, which are like Slick or like Pilk, and have done a great job in making the product very palatable. The question I think that we have still struggled with, and a lot of brands interestingly use in their communication, is how well will this go with my chai or coffee? And that remains to be answered, which again links back to the taste profile that we spoke about earlier. So, so this is a very interesting matrix. It's quite convoluted in the minds of a consumer, because as a consumer, you think you're health conscious, you may not realize you're ethical. So a lot of these go very hand in hand. And what we've seen is at the back end, when startups try to profile who the ideal consumer is, most of these things will at least fit into that chart. Just coming to what distribution is like, because we saw the consumer's mindset, we're now looking at how the consumer is shopping. Between online, offline, and restaurants, what we've seen is I think because of a lot of benefit that marketplaces have seen in terms of funding, in terms of traction, in terms of how much visibility they've been able to provide to FMCG brands, and we're now calling that whole vertical direct to consumer, is that the online channel has seen a significant expansion in the last, let's say, 24 months. Right, slightly before COVID, we saw a lot of shift happen already to something like a Big Basket or an Amazon, and people got very comfortable shopping online during the pandemic as well. So that's a very interesting option for FMCG. However, what we've realized is these are platforms where you don't tend to buy one product, you end up buying a basket. So as a brand, you then need to be visible on these channels. You need to own your search. You need to be able to spend on those platforms. And you also then need to be part of a loyalist basket over and over again for the marketplace to have some sort of incentive aligned with you. These are marketplaces which are not focused on the plant-based proposition, and which is why it's important to remember that they might not also be the most inexpensive. The farther you are from your target audience, the more you end up spending. Amazon and Big Basket, while very friendly to tier 1 urban customers, may not be focused on high protein content or a particular dietary restriction. And then there's marketplaces like we spoke about, VeganDukan or Vegano, which are more focused on what you want, very curated marketplaces. And obviously, we've seen that curated marketplaces have really expanded categories from scratch. Very good examples of this, drawing parallels to something which is completely different from what the food proposition is for plant-based, is something like pet care, which used to be such a small category. But with the introduction of something like a Heads Up for Tails or Super Tails, it's very interesting to see how marketplaces which are curated can give so much visibility to brands. And these are actually marketplaces which grow with the brand because they're also starting in a new market. They're very cognizant that the user base is not exactly fully aware. They're also very cognizant that these are players who need significant amount of handholding, because your go-to-market strategy evolves and the marketplace is likely to evolve before you do. So very interesting partnerships here. And then there's your own website, which is in something like a Shakahari is doing or a Blue Tribe is doing, which is D2C, directly for the consumers. Then there's the offline channel, which is still not played out, but we've seen Imagine Meats and Urban Platter be offline. Urban Platter is a very interesting example of online and offline, very, very large scale business today. But again, is not only plant-based, they also do a lot of other stuff with it. So very good example of a mainstream brand plus this. And then there's restaurants which are focused on plant-based proposition, which could be something like a Good Dot, which does this through their own channel, and they control the experience of the user. And then there's B2B partnerships, which is something like what ProMeat is trying to do, which is partner with a burger chain or partner with QSR and be able to launch your product there. Just coming to what the commercials are like, channel margins, I think across the board, B2C, like we spoke, reaching your user is not the most inexpensive. It takes a bit. So B2C is fairly expensive as the online channel, which is why we think the offline and restaurant channels are very important in this space, because the offline channel gives you a lot of visibility. It triggers impulse buys. And with restaurants, it actually can control your own experience end to end. Just growth levers that brands can rely on are accelerator programs that some of these marketplaces like Amazon Launchpad is with Amazon, like Big Basket has an accelerator. And there's very similar stuff that Food Hall and Nature's Basket do. They don't call it accelerators, but it's very good visibility, relatively higher listing fees, but that's, think of it as your marketing cost. And it's a very interesting proposition for them. And then there's more mainstream brands who are focused on partnering with plant-based alternatives. So Baker's Dozen does this, for example, in their offline stores, they would keep another brand. Epigamia does this as a collaboration. Sleepy Owl recently collaborated with The Whole Truth. And then there's Kitchen Garden, like we spoke, which also stocks other brands which are plant-based and would incorporate that in the product that they sell. Just the investor's point of view, and this is really where we come in, I guess, is we look at three things in a big way, aside of the team and the founder, of course, is the product stage, because in a lot of cases we've seen that the situation is pre-product. A lot of founders have some MVP, but they don't have a sort of beta stage product to launch and market. This is actually a very interesting stage, the stage at which we came in, something like Growthwell, or the stage at which we came in Float Foods. In India, it's very interesting to see how this will play out, because taste is very critical. So having a pre-product stage is quite risk heavy for somebody who's an investor. And we would want to see some limited, at least, product in its state. It need not be in its final stage, but more the launch stage is where we're coming at. Steady state is, of course, someone like a Good Dot who's been around for a while and then ended up raising monies because they wanted to grow. Those are fairly easier decisions to make because you already have seen, tasted, tried, and know what the traction of the business is. The channels we already spoke about, but net, what we focus on is a B2B and B2C positioning strategy together, because B2B and B2C give you visibility and cash flows alike. As a founder, you will also be focused on whether your startup can generate cash and whether it can be sustainable, or does it continuously need loss funding to be able to go to market on a B2C strategy. The positioning strategy is something that we've discussed significantly also, but something to bear in mind is the sharper your brand positioning and your comfort knowing who your audience is, the easier it is for an investor to be able to back you, because this will suggest exactly how much ad spend you have. So are you going to then need, if I spend $1, am I getting 3 back? If that is not the ratio and I'm getting less than that, and you will be bound to get less than that in your early stage because it is a category creation game, you also need patient capital who will not chase you to then grow 10x year on year or 4x year on year, because you might just double year on year. And that's still a big feat, because even someone like a Beyond Meat took a decade to get to where they got to in a market as large as the US and as deep as the US. So it's very cognizant to then have very right business partners who understand that the initial offtake might be slow, but the growth will compound over a period of time. So you need to choose investors who would back you for a 10-year view and not back you for a 2-3-year view and then look for an exit. Just also adding to the exact same things, we spoke about this very, very briefly, is product, process, and team. The product, if it does not have any IP attached to it, and most FMCG products don't, then it becomes very critical to have a new form factor, which is a new taste profile altogether or a new texture profile altogether, or the brand pull needs to be extremely strong. So coffee, for example, is very mainstream, but Sleepy Owl would focus on making it cold brew, find a niche, then introduce something as mainstream as instant coffee. In products, I think what we've seen is Blue Tribe and Shakahari both have great nuggets, for example. It's not a new form factor. There isn't IP attached to it, but there is very strong brand pull. So there is a very strong word of mouth reference. With process orientation, there's very few startups which actually have technical expertise in their team, and I'm taking process and team together because machinery as well as food science IP that come with the process usually is linked to the R&D function. If you don't have somebody in R&D, at least in-house as a key person, then you should, because if you're looking to raise external capital, investors would want comfort on this one aspect. And then there's marketing and sales, which, of course, as the saying goes, it's very important to communicate to the users what you're selling. What you're selling matters less than how you sell it, is what FMCG folks say very often. To a certain extent, that does apply here as well. And this is, of course, something that everybody is already aware of, is the growth stories for Beyond and Impossible. While we see them as decacorns today, we do not still, as investors, often go back to saying they launched 10 years ago, have raised over $1 billion in capital. It took a certain amount of time to reach the scale that they reached. And if you put it in simple words, then Beyond Meat still took about 300 million. It took about 10 years to reach a $300 billion scale. At which they decided to IPO, which is significantly slower than a lot of categories in the US, like mattresses, like beauty, even, for example, like regular FMCG food. So some QSRs also would have scaled faster than that. So that's how real the category creation game is, because it's taken that long in the US, because we are relying on the PR and the awareness created by that market. From the pull of that, we expect it to take a decade from here. So that's how real the game is here. Impossible, of course, still has to list, but very, very interesting that we're already seeing plant-based startups go global and go IPO. Investor learnings, I think, is something that we wanted to focus on. Is the first question is the most important question. Are consumers ready? Because the answer is yes and no. The consumers are ready for consuming something where the taste profile and the texture profile matches something that they're already aware of. Do they know the specifics? Likely not. So it will take a lot of handholding by the brand, who actually becomes the first mover to get mindshare in the consumer's mind, to educate them. So that's the first. A very strong communication strategy is something that we focus on. And we cannot forget that mainstream brands are likely to also have plant-based options, which is very real competition to folks who are only focused on plant-based offerings, like an Epigamia, like a Raw Pressery, like an Urban Platter. Very interesting choices. The brand versus the IP, what we've seen plays out usually is most companies don't have an IP, which means they then need to focus very critically on what the communication strategy is. So it's a fine balance between the two. If you have IP, you're very likely to also have a team which might not be able to go to market directly because of marketing expertise, which is missing in the team. If you have a brand, you are very likely to maybe not have an IP. So having that team with this kind of a balance is very rare, and it's something that founders should think about. This is a category which investors are generally comfortable with to find an exit, because we've seen FMCG giants like even Nestle acquire in this space. So there's no question about what happens to me 5-7 years down the line if the brand has outperformed. I think we've spoken about CAC and online being the best channel. It's an omni-channel strategy that folks need to follow, and it'll be very interesting to see how the omni-channel strategy plays out. What we've also seen is a lot of these startups need cold chain. Cold chain is a very interesting pain point, and I know Sarthak will cover this in his presentation later. But India and cold chain have not necessarily gone hand in hand in the past. So it's a very important learning curve that needs to be taken. Is the audience only in tier 1 likely for the short term? Yes. It might extend to tier 2, but it's definitely not ready. Tier 3 is not ready for plant-based alternatives yet, because we really need to drop prices before we end up becoming a Bharat story. Focusing on outsourced versus own manufacturing very briefly is outsourced manufacturing generally lacks IP, own manufacturing generally is a moat for the business, and involves CapEx. So it's something that founders should take into account when they're fundraising. I think that's pretty much it from me. So I think,
Perfect.
Yeah.
No, I think thank you so much, Pooja. I think that was a really, really helpful and insightful presentation for a lot of our founders who are thinking about all of these things. And I think we'll defer the Q&A towards the last section, given we are slightly running over time. But I'll invite Sarthak from Huddle now to share his presentation and take us through the presentation flow. Yeah.
Yeah, thanks, Shardul. Just give me a second. I'm just trying to set up my my screen. Let's see.
Sure. So I'll encourage, while Sarthak is setting up a screen for everyone to submit their question and answers through the Q&A tab, we'll take them for Pooja towards the end. And just encouraging everyone who's from track 2 to focus on asking the questions today and also connecting with our speakers post the session. Thank you. Go on, Sarthak, please.
Yeah, hi. So yeah, thanks, Pooja. Very detailed and quite insightful, actually. So yeah, just a brief about me to start off with. My name is Sarthak Rastogi, and I work as an associate at Huddle. Huddle is a sector-agnostic accelerator. We both operate as a platform as well as a fund. Particularly, I think sector area-wise, largely the vision here is divided into 4 segments. Making India healthy. Can't really go wrong by doing that. I think a large part of what we've done is also been around commuting and mobility infrastructure and sustainability. Third, I guess, if I were to really sort of expand on that, would be organizing the unorganized sector, right? So largely these 3 buckets. If I just go back to what Pooja had mentioned earlier, I'm personally an aspiring vegan. I've been trying for a very long time. And so I definitely feel as if I fall into that that midpoint that she was referring to earlier in the presentation. Today's session, I think, I'm going to try and just focus on a bunch of points that Pooja had already mentioned, but really try and understand what that strategy could look like, right? I think we're going to try and focus on distribution, cold chain. We're also going to try and talk about post-COVID D2C focus and some of the portfolio learnings that we've had as an organization, right? I really encourage questions, so please feel free to answer, ask anything that you have in mind. So when it comes to distribution strategy, right, I think about it in 3 perspectives. Figure out the taxonomy, which is, let's say, the classification of your strategy itself. Second would be the system of distribution strategies that you should have in place. And then maybe lastly, we'll talk about some of the key takeaways that these things sort of jointly present. I think, so yeah, taxonomy, right? So divided into 3 functions, online, offline, and exports. I know I've mentioned splits. I'm going to get to that in a second, but if I just define what your strategy should look like, online should be websites direct through consumer. Second would be established marketplaces, Amazon, Big Basket, Flipkart, etc. Third would be emerging marketplaces like Wellverse or Cora Health. And then the fourth would be intent-focused marketplaces that we all know of, VeganDukan, Vegano, etc. Going to offline, fairly straightforward here. Modern trade, MT, general trade, A or B plus counters, and Horeca. Horeca including hotels, cloud kitchens, quick service restaurants, etc. I've added exports as a very separate category because I truly believe what Pooja said earlier, that it is definitely a channel. It's definitely something that plant-based startups or smart protein startups should definitely look at very seriously, because certain larger, more mature ecosystems do present that opportunity to grow the brand and present learnings, from there on, right? I still remember.
Right, no. Can you explain a little bit about A and B counters in general trade?
I guess A and B counters would be, so it's a grade that's given to every counter. And let's say there's tier 1, tier 2, tier 3 markets within cities, right? So these markets would then present different types of counters, right? Certain counters in, let's say, a very established neighborhood would still be called an A counter, but certain counters in Kirana stores in tier 2 markets within a very specific city would be a B counter, right? So it's basically just a grade that's given to your stores, really. So yeah, sort of just coming back to exports, right? I think the first time that I ever had my exposure into plant-based smart protein was when I was trading at Trader Joe's, which is a very large retail organization in the States. And I still very distinctly remember they had an aisle full of plant-based products, the smart protein products. It really caught my eye, right? In a country where in the US, where they already have like an aisle for cereal, it was quite refreshing to see Trader Joe's really pick it up. And Trader Joe's actually quite known for that that sort of push, right? They've always been sort of the spokesperson for sustainability in food ecosystems. So yeah, just sort of coming back to it, online, offline exports. This is how you should sort of roughly think about the entire classification, right? Now let's just actually try to define these ecosystems, right? And I know Pooja already spoke about it, but what truly is direct to consumer, right? There's a lot of information out there. I just want to try and just clarify whatever I can. The essence of a D2C model is for brands to manufacture, ship, and sell products directly to the consumer, right? Without inclusion of middlemen. Supposedly, this is also disrupting the traditional way consumers consume, right? Through retail stores, etc. So the infographic that you see on the right, a manufacturer here would be you or the product that you are producing. Then you sort of advertise your product on your own website. So true D2C, direct to consumer, and then your consumer then goes to your website and purchases the product. That's a general gist of how a D2C channel works. Yeah, I mean, D2C has been gaining a lot of popularity pre-pandemic. And of course, in the last 20 months, it's been accelerated through a variety of channels, right? Capital is abundant. There's revenue-based financing. There's also roll-up startups that are coming about. So it's a very large market opportunity. But beyond that, I think the Indian F&B market itself is the third largest in the world. And there's certainly scope for you to try and sort of get into that piece of the pie. Adopting D2C has many advantages. Primarily, I think positive unit economics, and this is a very key of how you build the business. You definitely need to have those margins that you can afford as a business moving forward. Reduce time to market. I mean, in this particular ecosystem, innovation is ripe. You definitely want to be the first, if not the second or the third, to come up with what you're building. And D2C allows you to sort of bridge the gap to actually being on the market and building that narrative and that story, right? Third, I think ownership of data is extremely critical, because direct to consumer is the only channel that's actually going to give you that level of data that you need for building your customer funnels, your loyalty programs, what new category to launch, what funnel to sort of probe, etc. Right? Unfortunately, anything else, right? So if I just go back, anything else apart from D2C is not going to give you that level of data that D2C can provide about your consumer, that is. So you should definitely keep that in mind. Second part of online businesses, I think marketplaces. I think marketplaces are a great way to hedge your bets against other channels. Online marketplaces like Amazon, BigBasket, Flipkart offer a variety of benefits. I think primary benefit is large audience with a pre-vetted buying intent, right? So if I'm going on a VeganDukan or an Amazon, etc., I already have a buying intent. And so that's kind of what you want to tap into, right? Another benefit is that marketplaces on most occasions offer logistics end-to-end from warehousing to last mile. So that function is totally outsourced. I also think marketplaces are an interesting way for you to position your product against your competitors or position your product against traditional incumbents, right? It's also a great way to figure out loyalty and sort of try to predict subscription offerings as well. Marketplaces typically operate on a flat percentage, although I've also seen many different models evolve over time. So that's not the only one available. So I'm going to try and move towards offline. I think one of the biggest learnings that I've had after working with a few plant-based or smart protein startups is that really the type of strategy that you should pick is omni-channel, right? And this is in line with the splits that I mentioned earlier. Setting up the right mix of sub-channels is very important. So the infographic on the right will tell you that that's a very traditional supply chain. You go from yourselves, which is a manufacturer, to a super stockist or wholesaler. Then you go to distributors. That distributor goes to the retailer, and then retailer is where the consumer then visits, right? Each entity, if you go downstream, commands a lower volume of your product. So it's really the type of mix that is suitable based on your unit economics, but also the type of insight you're looking to gain or the type of volume that you feel your product is able to command. Of course, a lot of these things are dependent upon taste, type of product, and so on and so forth. So that decision really matters, right? So setting up the right distribution setup is key. A few things that I feel anyone should consider is configure out regional dominance and give preference to regional distributors to create a sense of ownership. Competition between distributors is only going to harm because everyone's fighting for the same region, or at least the distributors are fighting for your product in the same region, and there's bound to be certain miscommunications happening. So I'd really suggest giving regional dominance and in creating a very decentralized operational mechanism. Consider stockists. I think stockists that have been in the business have a legacy brand setup already in place are the best way to sort of do that, right? There's many examples in the ecosystem that have done it. So I truly think that you should try to figure out the mix between stockists or distributors, giving you larger reach, visibility, etc. Very important is to create competitive advantages when it comes to payment terms. A large criticism of this ecosystem is that payments get hung, inventory gets hung, etc., etc. I think competitive advantages for any business are not inherent. You have to create them and you have to execute on them. So seek preferable payment terms is the general feedback here. As an early stage business, you will have cash flow issues. That's a given. So you should definitely position yourself in a manner that even if you're suffering now, at least in the future, you have the right setup once volumes pick up. Cannot emphasize enough that HoReCa within offline holds immense potential and should be critical to any offline strategy. There's a lot of good work that's already been put in by incumbents that are on the screen already. And even personally as well, we've had learnings from Wakao Foods, which is part of our portfolio, India's first jackfruit-based startup. It did a pilot with it did a fest with the Hilton India, where it was a 3-month-long fest. They promoted sustainability. They promoted jackfruit as part of the menu in all 24 locations in India, right? I think it proves a lot of things when a company like that or a legacy entity like that does it. Firstly, I think it showcases intent to create intent for Hilton to create intent-focused and health-focused build for this consumer, right? Hyper-aware, health-focused, intent-focused, etc. It also gives visibility to early-stage startups like Wakao of course, strong validation of the product goes without saying. A very key criteria that they got out of the way was recurring revenue channel for B2B orders. And of course, huge visibility, product positioning, branding benefits, etc. Yeah. So what are the key takeaways that we've learned from online, offline, or even exports, right? I think channel split is very key when it's an early stage startup in this space. I personally, based on my experience, figured out that omni-channel is one thing, but having a 50, 35 to 15. So if I just go back, online 50%, offline 35%, and about 15% of your revenue should always be from exports. In fact, I would encourage this number to be much higher if possible, right? So some of the key takeaways, so preempt the right distribution mix for your startup and continuously experiment on percentages that hold true for your unit economics, positioning, or target audience infiltration. Negotiate competitive advantages wherever possible. Like I mentioned before, these advantages are not inherent. You're not born with these advantages just because you're a startup. You have to create them. You have to execute them in the short run. Seek cautious but short-term liquidity so that you can pivot very quickly if possible, right? So let's say online's not working out for you. So you hedge your bets against offline or exports, right? So you play around with the splits as much as you can, and you create competitive advantages while you're doing that. Thirdly, I think Horeca and exports, like I said, hold immense potential. Create forward linkages, partnerships, associations with larger, more mature food ecosystems like the Europe or North America. Moving on, cold chain, right? I think it's very important to define what cold chain is. What do we really truly mean by that, right? So cold chain is the system of keeping perishable commodities at their appropriate or recommended temperature from the point of manufacturing to the beneficiary. And the beneficiary in these cases is most likely your end customer or your B2B client. The cold chain ecosystem in this country is very interesting. India is one of the fastest growing countries for cold chain. There are multiple drivers contributing to this. Of course, consumption pattern is one. That's also primarily because of changing, primarily because of the health-induced narrative which is in the country for a while now. Demand for nutraceuticals and of course, increased incentives so that private institutions or private players can actually sort of be incentivized enough to fulfill those gaps, right? Key categories from our experience has been fruits and vegetables, pharmaceuticals, dairy, meat, and seafood. So inherently, this particular ecosystem, a lot of people have a lot of questions here, and I just want to clarify what I mean by that, right? So if you go from point number 1 to point number 5, you have your manufacturers, you have transporters, you have shippers, you have cold storage facilities, and then you have the end retailer. I would say point 2, 3, and 4 are really where your goods need to be kept at the apt temperature, and this is where historically the system has been broken. So first mile, centralized location, and then last mile. Cold chain in the country has not historically been up to the mark, and data suggests this is exactly right. We are ill-equipped as a country currently to handle the capacity that's required. I think only about 11% of the country's fresh produce is managed by the current cold chain. A lot of it goes to waste. So also very important to understand, just as a network externality, is that these are expensive ordeals for customers or for you as a brand, as a startup. Rising real estate costs or high energy consumption just inherently make this worse. But at the same time, I feel there is a lot of investment which is going into cold chain in general, and the emergence of cold chain as a sector is only going to benefit plant-based or smart protein as an ecosystem moving forward. Key takeaways, right? Again, may seem like I'm reiterating, but you should definitely focus on regional demand. Cold chain is very fragmented in this country, and cooling units are not mobile. Cold chain locations are disproportionately fragmented. Location becomes a key sort of consideration when it comes to opting for such solutions for early stage startups. Secondly, I think it all boils down to your unit economics, right? If you're maintaining a good margin then you will be able to sort of offset that high logistical burden. And when things scale, your business will have more predictability. And then the third would be, again, competitive advantages, and identify long-term partners that are able to sort of build the business with you, but also scale it with you once volumes pick up. Post-COVID D2C, right? So I've created a matrix of sorts, and by no means is this exhaustive. I think these are just some very broad buckets that you should sort of think about when you're building this out. And then by no means there's no sort of order attached to it either. Customer experience, create a brand that resonates with the intended target audience. Strive to achieve and provide the best customer experience possible. Because, like Pooja said before, repeat is not yet proven for this ecosystem. And so you will have to sort of bank upon these factors to sort of induce those repeat orders, right? Or to at least create that loyalty factor. Even if your customer acquisition cost is high, if you're able to retain a certain customer, you are able to sort of squeeze out that long-term lifetime value from them. So I really, really suggest you spend time creating a brand that provides a good product, of course, given, but also good experience alongside with it. Create user journeys that you can track through your products and through your channels. Moving on to sales, again, identify the right sales. I think I've already spoken about this earlier. Create unique and attractive pricing options. Very sort of underrated thing that D2C startups do is they play around with their pricing. This may be for a newer SKU that you're launching, or maybe for the existing ones. Maybe you figured out your gross margin is just higher now, right? So do incentivize and gamify the process to purchase, so that you sort of keep this consumer intact moving forward. I think marketing is the most important out of this, right? Performance plays a very huge role when it comes to D2C startups. Most D2C startups that I've seen apply a very, very strict data-led approach to paid marketing campaigns. You will have to spend, right? You will have to spend, and you will have to showcase a healthier enough return on that dollar spent, so that you can afford other activities as part of the business, right? So very critical to sort of build towards that 3x number or 4x number. Even if it's not there currently, I think you should certainly put the system in place of distribution, of cold chain, etc., to get to that stage. And I'd say, deploy conversion optimization wherever possible. Whether it's the ability where I've bought a particular product from a particular startup. It's as easy as sending a WhatsApp automated service post-purchase, right? Or the ability to convert customers through WhatsApp. I think you definitely need to think out of the box, but also try and deploy it wherever possible. Management of e-commerce platforms. Sure, website-wise is your control, but you should definitely have expertise in Amazon or other marketplaces that you're going to list yourselves in. And then lastly, you should certainly automate a large part of your customer communication, and also deploy CRMs for internal management. I'm just going to spend some time about Huddle, right? So since inception, I think we've firmly believed in an acceleration-led model to support verticals in future of food, right? So our past performance, we backed about 50 startups in general. We love the ability to build the venture with you, and of course, sort of fund to venture alongside with you as well, right? So I always say my startups that we are venture builders first and venture capitalists second. It's our job to try and sort of co-accelerate this entire ecosystem, because that is the need of the hour, right? To sort of co-build and then sort of invest in these startups as they grow further. We love building alongside founders with a clear understanding of what they're building. Figure out next line investors, ensure that they're the right backers for growth. So as a very quick example that I want to showcase, in about 2017 or 2018, you may or may not have heard this startup called KetoFi. KetoFi recently transitioned, but 2 years ago, transitioned into Wellburst. Now, Wellburst is probably one of India's best brands for patients who suffer from diabetes. And I think we were very early to identify what they were looking to build out, right? At that point, D2C was not what it was, but this is a startup that's done 100% of its sales online, right? It's great validation of the model where we were able to support them throughout their journey, not just to transition from KetoFi to Wellburst, but also to grow purely online, right? So we've gotten great validation for the startup through Yuvraj Singh, who's recently backed them, and of course Jubilant, who's recently acquired percentage of the company. Now, how did we really help the startup? I think apart from investing in them, we were able to figure out a lot of portfolio synergies. The name of my organization is Huddle. So we do have a lot of in-house resources that we shamelessly use and try to figure out. I think it was more about a function of identifying pain points that are very specific to a particular startup. And for them, I think distribution access was one of the key elements. And that's sort of what helped them go through not just the journey from KetoFi to Wellburst, but also from what they've already achieved so far, right? Just a general sort of gist on our portfolio companies. I would like to highlight, you may have heard of some of them, Milk and Oats, which is India's first oat milk startup. Altine Ingredients, which is a B2B ingredient-focused protein startup. They have also been recently picked up by ProVeg Incubator in Europe, and Wakao Foods, which is India's first jackfruit startup. Thank you. My name is Sarthak. Feel free to reach out to me, drop me an email. Happy to walk you through a variety of elements of your business. Thanks, Sarthak. Over to you.
Fantastic. No, thank you so much. I think super helpful deck again. And in just of time, we'll move on to Sagar so that we can cover at least all the panelist sessions today. And then towards the end, we can prioritize the Q&A, or people can connect with you offline as well further. So Sagar, I'll invite you to share your deck as well. All right, great. And once again, if you have any questions, please submit them through the Q&A, and Sarthak and Pooja can take a look at them in the Q&A section as well while Sagar is presenting, and just feel free to direct them towards either Sarthak or Pooja. Please, you'll have to make this into a full screen.
Yes, so thanks a lot.
So on to you, Sagar.
Sure, thanks a lot. I think I'm able to see everybody's screen here. Is it also visible to you? Are you guys able to?
No, I can see your presentation clearly. Yeah, just this presentation in full screen.
Sure.
Yeah.
Okay. So, hello everyone. My name is Sagar Mehta, and I'm founder of VeganDukan. VeganDukan was actually started in 2019, and that was the time when close to 3 similar ventures were already existing. They were like, kind of marketplace or a multi-brand online online e-commerce stores. Now there are close to 6 similar kind of startups who are doing what we are also doing. We are a marketplace where we work on a hybrid model of drop shipment as well as inventory led model, and we split it in a way where we understand what kind of products are moving faster, and typically they are meat and dairy alternates. So those products we store at our place so that we can pass on the benefit to the customer, because shipping actually gets optimized and customer experience also becomes seamless. So this is something which we have also found that customers are much more comfortable with, rather than everything coming from different direction. Majorly when it is, frequently bought items. We are based in Bangalore, and primary reason for me to start was, it was animal rights reason, and then also, how going vegan can become easier in coming times. So now we have close to 200 vendors, registered with us, and close to 2,500 products which are listed on our platform. Just a minute. So, basically, giving some insight about how it was started. And so when I turned vegan close to, 8 years back, this was a very, objective question. Now I get that, what actually gave, a better direction to what we were doing. So I was a primary customer first. When I turned vegan, there were only 2 brands which were actually, catering to the needs. One was Silk, which was, imported, dairy alternate brand, and another was SoFit, and third, I would say it was Soy Vita. Either they were quite expensive, or the taste was not palatable, and those kind of dissatisfaction was building in. And I felt that, if this is taking a lot of acceleration, this kind of lifestyle, then there must be demand coming in coming time. And so that is where it was started in 2019. And then as we grew, as I kept seeing that more and more startups also started coming in with different kind of products. Yes, Good.Wesley, Ahimsa Foods, Good Milk was just launched, and so all those brands have I started noticing them, and then it was an idea that let us create a marketplace which can fulfill completely vegan lifestyle from one store. And yeah, that is how VeganDukan's idea was generated. Now when I try to see the brands which we are working with, then we typically see 3 things. One is if the brand has seen a clear-cut gap in the market, and they are trying to work on that. It can be so, for example, seafood is a big gap in India, and that's where very few people are working on. And the other is if there is a value addition, like something is already existing, but is it good enough? It can be sensory experience, it can be in general quality, it can be price point, it can be availability. So, or third is it's just similar kind of product but with better brand marketing, and that way if somebody has better resources. So that is one thing that if you are into this, then be customer, then you will be able to understand what you should come up with better. Second is know your customers. Try to visit as many places as possible wherever you would be able to understand them. So when I started, almost 4 years back, I started researching about what I should do in this field. And I was visiting all those associated forums or the fairs. For example, Ahimsa Fest, which was also aggregation of all these vegan businesses in Mumbai, or IFA, India for Animals, from FIAPO, where a lot of like-minded people or people who I used to hear what the struggles are, or so similar kind of things. Or and one of the key experience I remember when in 2018 I visited Wilder Mart. They have organized this Wilder Fest in Bangalore, and I hear a lot of people talking about Chetrans, the one brand which actually chimed a lot, and people were missing it, and they spotted that brand because somebody brought it here just for that occasion, and people were going really gaga about that brand and the price point they have, the product quality they have, and that was one of the first brands which I started getting them from Pune after hearing from that fest, and that gave us a good start. as a venture. And definitely, there are, experiences related to cold chain, because their products were all like that, curd, shrikhand, and tofu and all. So those learnings also I would be sharing in other slides. Now, when we were starting it, there were a lot of things which won't be perfect. At least, if you're in business like ours, definitely many people like you who are into food tech, but, for us, a lot of techs which were available, which were also affordable, we had to work with that. There were a lot of, manual work we had to do, but then, as time changed and, we grew a bit, we had better resources, we started changing our tech as well. And initial brands were like, Good Milk, Chetrans, and a few other brands, which actually helped us to become visible and a place where, people feel that, okay, fine, we can get our, basic needs, taken care if we are turning vegan. So that was just a starting up part. Now we have close to 200 plus brands and 2,500 plus products, and we keep getting 7 to 8 requests every week that they would like to launch their products with us. And from that portfolio, which might be most interesting to you all, would be meat and dairy alternates. So this is the a split what we have. There are close to 80 SKUs we have, which are under frozen category. Non-frozen, there are close to 30 SKUs we have. And these are split under close to 10 different categories, like, either you call it nuggets or biryani or some starters, or maybe, chicken counterparts or mutton counterparts or fish and all. So close to 10 categories we have created. And when we talk about dairy alternatives, we have close to 6 categories, like, milk, ghee, butter, cheese, and dips and all. So like that. There is only one egg alternative we have right now with us, that is plant-made, and we are still looking for one honey alternative. And so yeah, this is the kind of split we have. I would say there would be close to 20-30 more brands which is still not listed with us, and for various reasons we are taking time to onboard them, or we have not discovered them, but they are still there. We see them on Amazon, and we also see they do D2C marketing, or they are probably somebody is importing it and just doing it in local distribution. So, but yeah, I think this is can give you some fair idea about what is the status of number of brands we have in India right now. Now, I would say when it comes to branding part, this is to me is one of the most interesting thing, and definitely because we are into service business, and we are not into food tech and all, and that's where. But this was also my personal, personally very interest area. So when we started, I had one thing in mind, that what I'm trying to do, I'm trying to bring all these vegan ethical brands together, and that's where it was a lot of that kind of core messaging was we had coined up. Later on, after 6-7 months, I understood, talking with customers, talking with, suppliers and all that, they were finding it very difficult. And that was like, I understood that, though there is a meaning which I understand, and probably if I need to, and I can explain people and they would also understand after that, but still it is not customer friendly. So like vegan gung-ho is, people working together with zeal, and we was for vegan. And that's where we thought that we should look at changing the brand name. Let Us Rise was another brand name which I had thought, and this was all that activism was on top of my head, what we are trying to do. But slowly, when we understand customer better, when we understand normally who would be our sustainable clientele, that time we also have to make it much more easier for people to understand. So then with definitely team only coined this term VeganDukan, and then they only insisted and persuaded with the logic that this name is much more relevant for this business. So yeah, that's how VeganDukan was done in 2019 December. So there is some high level I would say priority. What I have tried to put this simple relevant word would be much better than a very deeper meaning word which very few would understand. And definitely, but you should avoid very generic word until unless you have a lot of resource which will help you to do marketing and branding well. Otherwise, we know many brands like they have very generic name, but then they are also a household name. But we also need to see that they must be either very much legendary brand. Many years, decades they have spent, and there were much lesser competition at that time. So that is what you can keep it in mind. I would also say that so feasibility wise, you need to check, because this is going to be a consumer brand, then whether trademark is available or not. And typically dairy and meat alternates are under 29 and 30th category. Now government government is also restricting people to use dictionary words. So they encourage you, or probably that we start coining our own words, and that's where it becomes a little more challenging. Whether you will get approval or not, because the name might be very relevant, but probably it might get into rejection. So that is one thing you need to check. IP rules are very simple, easily can be understood, and definitely some lawyers can help in case you are starting up. Definitely, second thing is domain you need to check, so whether that very friendly short right domain is available or not when you are coining any brand name. Then for designing, I think the tech advancement has been so good that the tools are so affordable, and they are very user friendly. You don't need a lot of expertise now to operate these tools. Like everybody might be knowing Canva, and we have been using it since we started this business. And then all these logos, we have used those online tools, and we have spent maybe $10 per logo. Definitely we have spent a lot of time in doing it, but when you are starting up, your job will not get you will get into any kind of delays or maybe you need not to hire any big agency to do this thing. Those things are definitely possible with bit of interest, a bit of persistence in understanding the tool, and some consumer insights and learning from different brands how they are doing and all. So yeah, and Altex is a recent brand which we have launched. We have started our own private label. We have tried to identify some gaps in market, and that's where this brand we have launched in the VeganDukan. So yeah, I would say this is a very interesting topic when it comes to tone, because we are into that kind of business vertical where a lot of we need those consumers, but we also want to question them, or maybe we want to question even your traditions or thousands of years of habits of human beings. And that's where we have done many experiments also when we started, and then we have understood that the blended approach looks most appropriate as of now, where you definitely bring the core truth in front of customers, but you also bring the benefits of those things, and in a good way, in a more palatable way. Again, this is TG specific, and why I say so, will give some insights about that. So when we talk about vegan versus plant-based, so now when we see these are all Google search which is happening in India, and still you see that the vegan or anything associated with vegan meat, vegan butter, vegan cheese, vegan lifestyle, vegan supplements. So these are the kind of search volumes we have, and same for plant-based. So the popularity wise, the ease of understanding wise, vegan is much more straightforward word for people or consumers to understand what we are talking about. A few months back, I read an article also that there's one similar to Big Basket, but in USA, and it's in Instacart, I think. And they have released one news that the word vegan is much more dominant in their search engine than plant-based. So and I always had this one-to-one discussion with even Shardul many a times that how should we position ourselves, or what should be marketing communication. But what we feel is consumers are still finding it easy to call something vegan than plant-based. And when you also look at little more qualitative data, better than just generic vegan something. So vegan meat has like 21,000 searches happening every month in India, whereas plant-based meat is around 13,000. There is one exception there. Mock meat itself has close to 13,500 searches happening. So we have also kept our category as mock meat on our website. And for dairy, vegan dairy or vegan XYZ, whatever you can think of, so that has much higher searches happening than plant-based. Now this is the data which is also very interesting. This is like today's data, I would say, and it throws data for last 1 year. So that is what we have taken. We feel that a lot of people get it very clearly. It is more about getting it. It's about the simplicity part of it. India probably still don't have very much negative connotation about vegan word. Plant-based is just emerging new term. So I would say right now it would be a good time when you are starting up. Probably vegan can be a good word to start with, to capture the understanding of people faster. Plant-based is more of people who have better exposure. They know all these things already, and they also know what Western trends are, and probably SCCA population from flexitarians, like they know it, like they will have this also and they will have this also. So they have studied all these things very well, and they have made the decision. So those kind of people probably plant-based can work much better. Definitely they are higher ticket value premium side of it. Whereas our major Indian target audience would be the largest population who would understand. And in fact, I also see that a lot of activism also happening, and even Good Dot is reaching out to a small eateries like the Vada Pav, or even those very small eateries where they are using word vegan. So even that kind of level where literacy in English is going to be difficult, or a lot of this kind of exposure are going to be difficult. I think that is where people at ground level using this vegan word a lot, and that is gaining much more and faster popularity. Positioning wise, right now, as it is seen that when they say vegan, it is always about people making some conscious choice. It can be about animal rights, or it can be about environment, plus health, yes. But then plant-based, moreover, we feel that it is about health orientation is always first when you call it plant-based. And bit surprising to me, but when Imagine Meats was is launched, and mostly everybody would be knowing about that, and on their website also we see that they definitely put things very clearly about the animal welfare issue associated with meat, which I was thinking that they might not do it because they are celebrities, and probably they would like to play it little more diplomatic way, but they put it very clearly. Yes, on their packaging they don't use vegan as of now, I know. They use plant-based, but the communication actually involves those kind of things as well very clearly. So this is all interesting. It is evolving industry, but as of now we feel vegan is something which is chiming much well with customers. Now a bit about distribution gaps, what we have learned. And I would say, so right now starting any business or reaching to a customer is much more easier because there are, I would say, 2-3 main reasons. One is you definitely have Amazon, Big Basket. I would say Amazon first because Big Basket has its little longer process, and then you have to produce inventory and all. But then Amazon, Flipkart, or maybe marketplace like ours, or your own website. It's very easy to get on board it. It's very easy to have very small number of inventory. You have your FSSAI GST number done, and then you can start your business and you can just test the market. Second is now 3PL logistics are very, very strong, and it is becoming very competitive market, as well as there's a huge potential, and there are so many aggregators are also coming in, like Picker, Shiprocket, and Go Swift, and there are so many now. At least 10 would be there whom I know. So it has become very easy for you to shipment can go from your place or your factory to the customer's place if it is non-frozen or ambient temperature character kind of product. So much easy, though India has huge geography, but I would say your end customer can get typically, I would say, within 5 days. If they are like very, really far off in northeastern side or on the island side, probably they will get it in 7 days, 6 days, or maybe far Leh Ladakh side. But typically you would be able to serve your customers within 3 or 4 days, even if it is like road trip. Going through road transportation from Bangalore to Delhi, it reaches in 3 or 4 days. That is what we have experienced. So it's much more easier. Life is that way quite systemized now because of all these players and this technology in place. Cold chain limitations earlier already has been discussed by Sarthak and Pooja. It is definitely very much scattered, unorganized. Even if bigger players who are trying to organize transportation in India, still cold chain is not very, very reliable with them. They have like couple of experience I had, and then I felt that they are still not ready, or it is going to be very expensive. What we have felt, for at least 2.5 years, we have been getting a lot of frozen goods from Delhi, and so railway has been very, very go to medium. So dry ice, thermoball boxes, and railway. Definitely expensive, but still it will not make it very difficult to work with those kind of expenses, give margins to your retailer, and still you earn your reasonable margins, because we have been doing so. Definitely it is business is making sense for people. So railway is a great way to do it if it is but you need to check which places you want to do this thing. But we have been doing with we also are a distributor of Wesley, and there are goods we have sent to multiple cities in India for one of the client we have. They are one of the leading in burger chain, and they have launched their vegetarian burgers with them, and it goes to various parts of India. So railway has been our go-to medium. Courier challenges are in India is like in US, what we learned is they allow you to do cold chain shipping with dry ice and all. India, you can do away with that. You can do that. They will not catch you, but there is risk associated if it is going through air. I think there are restrictions where they do not allow cold chain. Those gel packs don't work very well beyond I think 12 hours or something. So yeah, I think there are some challenges definitely there with cold chain. Retail distribution. So we have a little bit of understanding. So whatever learning is there, have put there, but this is maybe Sarthak would have given better idea about it. So I would say that if you can get distributor who are plant-based focused, would be really good. Because they have to fight for shelf life. The experience what we had with one of the known retailer in Bangalore is, though they assured, we were directly distributing, these products, and they assured us that there would be a separate section, and they have a huge plan for plant-based and all. But it has still not taken place, and the products are still not very well placed in shelves. definitely there are other issues, real business issues like, margins or listing fees, and, you have to pick up the goods when it is not sold. Those things are, part of it. So all these things your distributor should take care of it. So if distributor has a lot of zeal in this sector, you should definitely offer somebody like that. But I know it is going to be difficult to find, such kind of distributors in every cities. Second thing which you can think of is, it's best to distribute yourself, so that you can be direct POC for all these, retail chains. And that's where, it becomes much more interesting for you. That there is a better control, there is a better learning as well by appointing your own people. So that can be a little bit expensive because there is going to be upfront, there's going to be fixed cost with that. But I think that can be a better approach if you think that, you're very confident about your product. So now, just a minute. Now, when it comes to partnership, so, there are typically two kind of partnerships. When you launch, you would be looking for, either marketplaces like, any marketplaces. They would charge anything between 15 to 30%. Now, it also depends on what kind of model you want to work with them. If it is going to be a drop shipment, it would be on lower side. And why it goes higher when you work on inventory-led model, because then shipping is what they need to take care. And that's where, in drop shipment, either you charge customer for that, or you bear it, or you partially charge customer for your shipping. And that's where, they can work on lesser margin. When you go to retail, it would not be less than 25%, as we have learned. It can go up to 35% as well. Payment cycles in large marketplaces, they are much more efficient to handle all these, financial transactions and, reconciliations and all. Probably they will give you 7 days, 10 days, or 15 days as well. We take about a month's time because part of it is, quite manual. And retail, it can be 30 days, 45 days. And probably they will pay you as they sell. They may not even give you money until, products have started moving. And payment terms differ from a kind of product you are giving. If it is, very large and fast moving, large brands and fast moving items, they would pay you really, really quickly, on time and all, because they know that customers are asking for it. This kind of products, they are still they are evolving in customers' mind. So that is where, you need to be patient, or you have to be very persistent and have, better relationship with them. So inventory risk wise, I would say that, in drop shipment, risk is really, really minimized when you are starting it up. I would suggest, when you are just trying out your product, don't give inventory to anybody. In case you are going to do your D2C website as well, bear the shipping. Don't worry about that initial stage, 2-3 months. Give shipping free to the customer, so that you understand that, how it is moving. And then slowly you can move into, inventory led model as well, with any marketplaces or retail in this way. Listing fees, there is no listing fees on any marketplaces. And retail, definitely it can go anywhere. You can put any number in that blank, and it is also, negotiated. But if people are importing those brands, it can go in few lakhs as well, as I have learned from few, partners we are working with, and it can go into a few thousands also. So it can be anything in this year. So partnership, some other nuances. I would say these are nuances from customer point of view. So when you're on marketplaces, your marketing need, that becomes a little bit moderate. Definitely you have to do it, when you list your product anywhere, Amazon, Flipkart, or any other niche marketplaces like us. So there is some marketing spend you need to do, or some kind of exposure you would need to do, so that you are not lost in, so many products. But when you are in D2C, when you want to do it yourself, your own brand, .com, .in, whatever, then you have to be, completely on marketing. You have to do it. And that's where, though you save your margins from retailers and your, partners, but then, you have to spend money on your marketing your own portal. So that is very important. It can be, inorganic marketing budget, or it can be, really content driven through social media and WhatsApp and all. But you have to, keep your resources ready for marketing as well. And retail, yes, scope is less to do marketing, but then exposure is also limited over there. Now this is only these three scenarios only when you are thinking about D2C or the end user. If you are thinking about B2B or maybe Horeca and all, then approach changes there. But this is only about when end customer is going to utilize your product. So yes, shipping is definitely going to be one very important factor you have to always keep in mind when you are going to sell something online, because it is the cost which will be there and customer never want to pay shipping. So many people, so advisable is blend your shipping in your MRP. It is always better to do that way. Customers, so these are few findings that customers to pay same, let's say 100 rupees. But if they see free shipping, there would be better conversion. Then there is like 80 plus 20 or 60 plus 40 shipping. So that's where even we have learned that large marketplaces, they insist that increase your price, make shipping free, and that's how customer becomes a little more comfortable. When we talk about reach, so marketplaces would have much better reach when you are just starting up for your D2C website, and retail definitely has its own limitations in this way. Movement wise also, it has similarity, similar proportion, highest, lower. And again, these are very much high level observations. It can be different for different brands and how people have perceived them. Something has just gone viral and people just would love to go to their own website and do it. So, but this is in general, this is how things shape up. Experience wise, yes, when you are in marketplace, you need to have right kind of reviews, authentic reviews. That changes your sellability a lot. Direct to customer, when you have your own website, it may differ, because people may think that you have put your own reviews also. And retail customer experience is best because you're touching a product and they're handling it themselves. Now, just for priority wise, I would say when you are starting it up, definitely you should have e-commerce first approach. And then have your own website as well, and then go to the retail, and specifically in metros where there is a very high chances of getting your products lifted. This is some kind of product focus you need to do, and earlier also both the persons have also iterated that you need to have the right quality. Quality is most important. And when we talk about quality, first of all, it is taste and sensory experience. Like there is one statement from Seth Thibault. He's founder of Tofurky, and he said, taste is king, price is queen, and everything else is marketing. And probably we also see that it is not enough that because there would be, with great marketing, there will be first time purchase will happen, but with much better product, you will see repeat purchase happening, and that's what will make our business sustainable. So that's what is very important to keep in mind. And I would say we have tried to bring all our learnings together, positioning wise, and how we should market ourselves, how should we market this product category as well. So there is one ad we had made, and which had got a lot of appreciation. So like we were also surprised, and that's where I thought, let me show you that.
Sure, go ahead, please.
Yeah, just a minute. I'm trying to. Just a minute.
It's a milk duck. Her cheese है plant-based. Cheese, ghee, दूध, दही, tofu, tempeh, chicken nugget, chicken keema, chicken kebab, chicken patty, chicken masala, chicken popcorn, sausages, mutton tongues, mutton samosa, fish fillet, protein bars, protein powders, cheese supplements, cookies, food products, each sitting on ice cream, plant-based rolls. अब vegan खाने के हैं कितने बहाने. Healthier options के चुका.
So thanks a lot. I think
Yeah.
this is all from my side.
Yeah.
I'll just, stop sharing my screen. Thank you.
Absolutely. Thank you. Stop sharing your screen. Just a couple of thoughts on the vegan positioning that earlier I think Prateek was asking about. So obviously, like, I think we have to look at this from a perspective of where the category currently is. So we have always stated at GFI India through all our consumer research. And by the way, the session that I gave earlier, right, in the chat box about consumer research insights, etc., the work we've done with Deloitte in terms of creating persona profiles, insights on specific customers categories, I think is definitely helpful here. The thing you have to understand is basically what Sagar is stating is true for early adopter cohort, which has an overlap with vegan audience, right? So when you start selling your products as a company, you have a choice how to brand. Do we cater to the, so, vegans in India is probably very low single digit number of people, right? And when you look at, for example, the stats that Sagar was sharing earlier as well, when you compare that with plant-based, so plant-based meat, eggs and dairy as a category, like plant-based meat is definitely new and relatively lesser used word as of now compared to say vegan meat. That's also because of the fact because it's getting built. But later on, if you know who your TG is, right, flexitarian, non-vegetarian cohort, like all of our speakers were speaking about today, and we've seen this through multiple sessions, all the study material given earlier, the focus would be for you to shift away from that messaging once you hit that plateau. So what happens with a lot of vegan brands is, and this is true also from Good Dot, we've had Abhishek, we've had Good Milk, we've had multiple people talk about this in our previous sessions, when how they started out with a relatively smaller TG of vegan customers, right? They built out their brands, their sales hit a peak. And then obviously, unless you appeal to a larger set of audiences, and then that's the kind of cost benefit analysis you have to do in your branding exercise. How do I shift away? Is there a legacy cost of shifting away from that vegan messaging? Or would that probably mean for a large group of people that they're going to be turned away? And the other problem is the legacy or baggage that comes with that word. A lot of vegan products in India were not really meaty in terms of functionality, in terms of sensory properties. So that's the problem you're dealing with then. If people are thinking about vegan meat, they're thinking of the earlier variants of farm meats, mock meats, or, soy chops, soy chunks, right? We were talking about earlier, like think about the category of soy chunks. Now, Ruchi Soya is obviously a legacy group who first launched that, and we've have founders of Ruchi Soya, the Shahara family in our community from 2.5 years. They're looking at this category as well. So I've had this discussion with multiple people, including, for example, the companies that are now. So I have given an example of Swiggy, for example, adding plant-based meat as a category in their app. Now think about the reach that Swiggy really has in the research they would have put in terms of turning on or off customers that are the huge base that they might be appealing to in terms of selling meat, eggs, and dairy products. So don't just think about what your customers would look like now. In the shorter term, yes, that would mean probably more keyword searches, probably more sales. So you have to be confident, okay, even if I do that now with my early adopter cohort, would I be able to pivot later on to serve a larger category of customers, right? So all of those things you have to account for when you're positioning. And I think for VeganDukan, it makes sense. But you have to keep in mind whenever you're doing consumer research also, right? Now what these companies like Impossible, Beyond, others have started doing is they've started focusing on meat, eggs, and dairy, right? It's not plant-based Impossible food. It's Impossible burger. It's Impossible meat, right? It's Beyond burger. So in itself, they're highlighting what it means to eat meat, eggs, and dairy. And what you can be assured as a customer when you're going to that category is, okay, what I'm looking for when I eat meat, when I consume eggs, or when I consume dairy, that's the kind of experience these products are going to give me, right? So it doesn't really matter too much as long as you can deliver on that and position for a, sort of a neutral TG. I think you should be fine. So that's one part I wanted to quickly supplement the insights that already obviously very well were shared by Sagar in terms of his own experience building a marketplace, which primarily caters, I think, to a lot of vegans, but has increasingly started catering to a lot of flexitarians and plant-based food eating cohorts as well going. That, I think there was one question from Ronak. So let's start with that. The question was around So I think either of you can answer this, Pooja or Sarthak or Sagar. The question is from, so it's for Sagar. So what's the average consumer acquisition cost and the churn rate for your marketplace? And if you can share, general insights for what does it look like for your competitors, or perhaps what it should look like in this segment for people trying to build, a marketplace for these kind of products, that would be helpful.
So yeah, I think this is definitely a pain point for any startup. Customer acquisition cost, I would say, it definitely averages around 200 to 300 rupees, and it depends on which month we are operating, and many are trends. But yeah, that has been average for acquisition. Churn rate, so right now it is little too early for us because there are a lot many first timers we are seeing. But we have improved our customer retention also from around 15% to it is gone up to 25-30% now. But it is changing every 6 months. We see a different number because of this as our market the customer base becomes larger.
Absolutely. Thank you, Sagar. Anybody would like to add to it, Sarthak or Pooja, in terms of a generalized kind of perspective on what consumer acquisition costs are looking like for a portfolio of companies in this area, etc. And how is that important? I was thinking just now, talking about vegan TG, right? Like the cost of acquiring consumers who are probably vegan and are already mission aligned versus later shifting on and, catering to a larger segment of population, which does not probably care about any of this, but just taste price in most food FMCG businesses, how that might change into a larger FMCG kind of company might be helpful as well, if you have any.
No, I think 100% Shardul, and that's exactly what we were trying to, I think both Sarthak and I covered sort of very small parts of what you just said in our presentations as well. Is the sharper your positioning to begin with, the easier it is to acquire customers at a lower cost, because mentally that's how it makes sense. But over a period of time, what also happens is if this community does not grow as exponentially as you want your business to grow, cost of acquisition will eventually catch up. So what happens is at some point you tap out completely. This community is completely tapped out or saturated. And then I'm now going to a new audience. Once I expand to a new audience, my CAC will increase again, because the more generic I start becoming, the more interesting it is to see how conversions will shape up. It can go either way. Don't get me wrong. The way it works is there could be somebody who has significant brand pull, because of which someone like even me sitting a whole continent away knows about Beyond and Impossible. And I would purchase from them at no cost for them, right? Because I'm searching for it. But if that's not the case, then you never know how it would shape up. So I think it's two curves, the way I look at it. CAC can go either like this, which it does for FMCG brands in general, or it can be stepwise, which is it's not that high to begin with, then you saturate and then it becomes super high. But either way, it's trending in the direction that you don't want it to trend in, is the way I would sort of look at it.
Noted. Sarthak, yeah.
Yeah, I just wanted to add on with the number that Sagar had quoted. I think, my experience with the few of our startups has been that the 200, 300 figure is actually half of what I've seen on different marketplaces, right? Primarily because these keywords are not being, these keywords are not hot, right? These keywords are not being circulated around enough. And the audience itself is so large that you end up spending so much to even get a portion of that.
Yeah.
So just wanted to comment on that. Just that number itself is higher than what I've seen typically. Also, just want to emphasize on community, right? Or the folks that you build the start of your business. There are, in terms of your innovation or the product that you're building, you want to be first to the market, but you also want to be the first to service those 10K consumers that are willing to consume your product. And holding on to them in the long run will only, there's an exponential effect that kicks in after that. So really, really try and build your first 10K community. Those are going to be your most loyal consumers 2, 3, 7, 10 years down the line.
Got it. Makes sense.
Just
Thank you. Yeah, please.
One thing regarding CAC is, CAC is also very much dependent on what kind of budgets you are working with. now, you can easily exhaust very, very relevant keywords in a day, and you really, open up your campaigns, and then CAC can go really high because you want to, sell to as many people as possible. So CAC is so much dependent on marketing budgets, what we are playing with. So yeah, just that is what I just wanted to add here.
There's a question in chat, Shardul, if you don't mind, I'd like to take that one.
Absolutely, yeah.
It says cultivated meat, and how serious of an alternative is it, and how long is it going to take? So I've actually spent a lot of time mapping out cultivated meat, right? My personal preference is also towards that vertical. I think internally, when we were mapping out this ecosystem, whether it's dairy, meat, whatever, right? I'm trying to group them in. We figured out that it would take anywhere between 4 to 7 years to even consider it to be reasonable enough as an alternative. Because right now, I just feel plant-based is easier to enter and easier to adopt from a consumer perspective. And I think right now the fight is all about taking an alternative. And sure, when you educate the entire ecosystem, there will be winners around the cultivated space as well. But I think from a capital perspective, even if I look at investing in any startup like that, I don't assume any startup is going to have a ready product created in India in the next year and a half, 2 years. A reasonable product being built, right? I'm talking commercial scale, right? And we have internally pegged the commercial scale number to at least 3 or 4 years. So yeah, just wanted to share insights on that.
Absolutely. And unless Pooja or Sagar wants to add to it, I'll just give my perspectives on it as well, right? For sure, it's a 5 to 10 year journey, Prateek, right? In terms of, so there's only one country which has regulated the market currently, which is Singapore. There are only a couple of places selling it, but at the same time, right, at the backward side of it, huge facilities are opening up. So at the risk of oversimplifying it, if you think about Tesla, right, like if you think about the EV adoption market, very few cars, but at the same time, there was capacity at the back end where huge factories were being built. The inherent advantage with fermentation derived meat, eggs and dairy, or cultivated meat, eggs and dairy sources is that you don't need the supply chain of, crops, getting them out of the field, creating isolates, getting them to your factory. So that's kind of reduced as an operating expense. At the same time, the equipment, machinery scale up. You cannot start small, right? You cannot start like with a plant-based dairy startup. You can start in a 10 by 10 room with a small kind of churner or something. You can create paneer. You can start selling in the local market. You can get some feedback, and then you can think about scaling up. It's quite different compared to this. Even plant-based meats, which are really high quality plant-based meats, right? Compared to farm meats or vegan meat, or some sort of a texturization technology, which is expensive, but it's getting there. Even when you see numbers, when I started out working at GFI India 3 years ago, there were a handful of plant-based meat, eggs and dairy companies. Now there are more than 450. Every major chain, every FMCG company, everybody, like KFC launched their vegan chicken nuggets, and it was insane. Like they've now rolled out to multiple stores across USA, if you just Google that information. So the category is being built very, very rapidly. I think it will ultimately trickle down. And as we've always recommended you guys to think about, these are not 3 separate pillars. So whenever somebody asks me, how do you see the market split in 2050? It's always X plus Y plus Z answer. You've heard this before, but the market sizes of plant-based would be X, cultivated would be Y, and fermentation-derived meat, say, Z. And then the animal slaughtered meat is, say, M, right? So X plus Y plus Z plus M is going to be the 100% market share. What we are really trying to do here is optimize for X plus Y plus Z. Everybody who's, working in the sector and contributing their talents to. I still see inherent advantages in all 3 of them. So no personal favorite per se. I think they all will keep growing. But for cultivated, it's definitely going to be 5 to 7 years. And I think fermentation probably lesser than that. So 50% lesser than that, 60% lesser than that, because we're already seeing biomass fermented products in the market, which have really good texture, etc. It's just that not many of them exist in India. So I hope that helps your question, Nitin. Anything to add here, Pooja?
No, I think very, very similar views. The only one other thing that I think I wanted to add is the larger time you spend on actually going to market, the more you end up realizing your go-to-market cost is. And somewhere that also comes in the product pricing, which is finally sold to the consumer. I think in plant-based itself, which is not lab-grown or cultivated, we're already struggling with that price point. Having it move even significantly away from that and making it, let's say, a 3x, 4x of what consumers are used to, I don't think consumers are ready for that either. So one is the infrastructure. The second is the purchasing power. I think that in itself is very fundamental. So, yeah.
Yeah, and I think for cultivated and fermentation-led startups, founders definitely need to have a more visionary approach compared to plant-based.
100%.
Even in plant-based, very, very visionary approach is needed because that category does not exist. But the ultimate fact, theoretically at least, and proven by many companies who've scaled up, is the unit economics are gonna really, really tilt the balance in favor of people working on these relatively better solutions for the environment, climate change, health, everything, right? Because inherently, crops are cheaper, right? Compared to animals. It's an inherent limit to that animal agriculture ecosystem that fermentation, cultivated, and plant-based startups would solve for. So think on those lines, everybody who's listening to this webinar. I think in the interest of time, we can take one question from Srirang. I saw that you had raised your hand, but if anybody else, yeah, go on. Srirang, tell us a little bit about what you're working on and then perhaps ask a question.
Hi, hello everyone. I'm working on a fermentation-based meat alternatives. I actually have one question for Sagar, and I think for others also, if they can contribute, is on like what has been the consumer behavior, because I think Sagar has an advantage of actually interacting with customers on multiple brands and their quality aspects, the issues faced in general, and which brands are doing well, what is working for them, what is not working for them. So little more insights on the consumer. Consumer insights on the products which are already available today, and if there are any white spaces we see over there.
So I think I can give some generic answer about this. Right now, customers the kind of customers we have seen, the customers who are well traveled and they are also trying out this kind of meat alternatives in India. They still don't find Indian mock meats at par. They feel it is far. It has to become much better. We also sell beyond products, and we get really good reviews about them because they are so close to the actual meat counterparts. So quality wise, I would say there is a lot of improvement we can definitely work on. Having said that, if you can change the experience with the kind of spices you use, the kind of texture, and position it very clearly that this is chicken alternate or this is duck alternate, probably that can work better. But as a raw material, people are still finding it very difficult. Very versatile product. Nuggets will work exactly like nuggets, we understand, but do you have that raw material which you can use half for biryani, half for curry, half for grilling? So those kind of things, I think customers would be very happy to have it.
I'll also just have a very quick example. Also tapping into existing cuisines really can work well for you, right? I believe Good Dot released a biryani, a couple of biryani SKUs, and they not only released it here, they released it in North American markets, because they know there's an entire diaspora attached to that particular consumption, right? I've personally been in these stores, and I know how people go. There's enough demand for MTR products in stores in the US, right? So certainly creating a product mix that taps into existing consumption, because biryani is the top selling category on Swiggy, Zomato, right? So this is my 2 cents there. Don't reinvent the wheel. I know. Do tap into existing alternatives is my 2 cents.
Yeah, that's true. I think also triggers repeat purchases very easily, right? Because if you try to introduce a form factor that somebody doesn't know, there is a learning curve associated with it. I'm trying to get myself to like something which I may not have liked. So it's more mental driven than my taste buds speaking for me. So something that I understand, I put side by side and just like or dislike. It's easy. That's true.
Absolutely. Thank you so much. Unless anybody has a pressing question, I'd recommend you connect with Sarthak, Pooja, and Sagar after the session as well. I'm sure they'll be happy to have a chat. But if you have any final questions, we can take one more. And thank you so much, by the way, Sarthak, Pooja, and Sagar for staying beyond our dedicated slot of couple of hours. So, and thank you everyone who's attended for quite so long. Any last thoughts? Please unmute yourself or just raise your hand. I can unmute you. All right. So closing thoughts from all of you, Sarthak, Pooja, and Sagar, from your presentations, from what we have learned from each other's sessions. If you have any parting thoughts or just any upcoming deadlines, Huddle, you can talk about Huddle's application programs or how you just take in people or how you'd like to connect. Further, Pooja, you can just sum it up perhaps by also talking a little bit about what kind of companies you're looking for investing in at GCP. And then Sagar, perhaps you can share your final thoughts on somebody who's probably building a marketplace of sorts or want to get in touch with marketplace for I don't know, increasing their sales and improving their channel distribution, etc. I think that kind of a closing thought from all of you would really help tie up this session. So Sarthak, starting with you.
Yeah, I mean, I would only suggest work on your unit economics as much as you can. Do reduce that time to market if possible. Keep experimenting even within the customer pipeline, right, till you get it right. As far as Huddle is concerned, I think we've spent a considerable amount of time figuring out what works and what doesn't. And on top of that, we're also extremely bullish on the cultivated fermented space. And would love to learn more about how you're building this out. We understand that it's more of a patient capital game, and we are willing to sort of take the leap for the right team. Feel free to go to our website, reach out to me. I'm very approachable. I think we all are in this ecosystem, so feel free to do that. Happy to answer any questions or just brainstorm. Honestly, I think that's the greatest part of our jobs, to work with entrepreneurs and founders such as yours, for the work you're doing. So it's the least we can do to help you out. Yeah, guys, over to you.
Pooja, do you want to go next?
Sure. So picking up from what Sarthak said, I think at DSG have been always focused on the better for you proposition. I know this is it's a big sort of terminology, because better for you can be broken down into clean label, into plant-based, into healthier options which are actually healthy. Clean label and plant-based may not be. I think all of the three verticals always open, doors always open also. I'll put my email on the chat for you guys to reach out. Like Sarthak said, this is our bread and butter. This is what we do. And we would love for the fund to be actually associated with somebody who's building something for the next 10 years. Very exciting space. I think 2 or 3 things that we've realized from the work that we've done is, one, the founders need to be patient, mission driven. Do not forget why you started what you started, because that idea in itself is not stale. Over a period, you end up pivoting, but that doesn't mean you move drastically away from what you started with because you're not seeing progress in the first 12-15 months. It is a category creation play, like I think I said multiple times in my presentation as well. So you should also find the right partners who want to work with you on the decade journey that you're going to be on. So, and all the best to everybody who is on this call and your teams, because very, very exciting space.
Perfect. Sagar, thank you. Thank you, Pooja, for that. Yeah, Sagar, please.
So guys, I think, it was very nice sharing all whatever insights we have built up, because it could give me a lot of learning myself. You can reach out to me if you need anything. Sagar@VeganDukan.com is my mail ID. And I think, so if you guys, who are developing products, if you are not there, then marketplace like ours will not exist. So we are very happy that, so many people are, working towards it. And it's definitely amazing game changer for the earth itself. We all feel that, it is going to be, it's a memorable time for all of us to do something collaboratively in a positive way to impact the world. So it's a wonderful time, and best of luck for what all you are doing. And I think we hope to, sell your products one day. Thanks a lot.
Thank you. Thank you so much, Sarthak, Pooja, and Sagar. Just quite quickly summarizing what we learned today, I think we had excellent insights on the distribution front, going to market front, understanding your consumer front, and perhaps it's a challenging space for sure. I think doing anything in food manufacturing is difficult in our country, and in that, in a technology forward area like ours, it becomes even more trickier. And I'm really glad that we have people like them in our ecosystem who are supporting startups and young talent or entering into the space to innovate and perhaps make their products more commercial and reach out to larger people. Having said that, once again, thank you so much everyone for joining in, and we'll see you on Monday on our next on financial modeling and taking your business to the next step. We'll also hear from ProMeat, who's one of our demo day teams from ISPIC 2020 and a participant in ISPIC 2021, working on plant-based ingredients paired with plant-based meat last time, from their case study of how they have gone through the overall incubation. They went through ISPIC to ProVeg incubator, and now they're currently, like you saw from Pooja's slide, also working with B2B restaurants. So quite exciting times to just share insights and learn from our cohort and past alumni as well. Thank you once again, everybody, for joining us, and wish you all a great Saturday and Sunday remaining. Bye.
Bye, guys. Stay safe. Cheers.
Bye.
Have a good one.